Welcome back. In today's video, we're going to be exploring the top of the market. We've been talking about this for a few months now, and we're seeing more and more. But Citigroup is saying that their valuation model is showing that AI is not in a bubble yet. Well, AI may not be in a bubble, but in my view, crypto is starting to rotate into a bear market. In today's video, we're going to be exploring Polygon, Coinbase, the M2 money supply, the Bitcoin, digital asset treasury companies, artificial intelligence, and more indicators that we are potentially exiting the complacency phase and moving into bear market rotation. And again, the bear market rotation can take months, weeks, and potentially even years. And from rotating from the top of the market to the bottom of the market. And during that rotation phase, the volatility is so high that you may see higher highs, you may see new all-time highs, but that doesn't mean that the cycle is not over. As I've showed you many, many times on this channel, we harp on this all the time. The days since the Bitcoin halving chart, this is called the halving tracker on X, you can clearly see that we are now at the 550-day mark after the Bitcoin halving, which historically is past the top of the market in all three previous Bitcoin halving cycles. But I keep getting told Cryptoviser, extended cycle, Cryptoviser, 5-year cycle, 6-year cycle, 7-year cycle, whatever they want to say to kind of go in with their thesis that we're not at the top. But at the end of the day, you're not going to know that you were at the top of the market until long afterwards. And we are not taking that risk on this channel. So let's go through the indicators. Make sure you guys are subscribed to this channel. We upload every single day of the year to give you the latest happening in the financial world. Sometimes we do deep dives into individual assets and cryptos or projects. And sometimes we talk about the macro, the zoomed out picture of the markets like we're doing in today's video. Also, don't forget to give the video a thumbs up. Thumbs up are free. Crypto is not. Let's get right into today's video, starting right here with Polygon. Now, Polygon boss says that he's been questioning his loyalty towards Ethereum. Well, does this happen during bull markets? No, this doesn't. Polygon co-founder Sandeep Nawal has criticized Ethereum's leaders for dismissing Polygon's status as a true Ethereum layer 2. And by the way, I would agree. I've been saying for years on this channel, Polygon is a premier layer 2. It is the premier layer 2 on Ethereum with the most usage, the most micropayments, the most integrations, the most stablecoin integrations as a layer 2 on Ethereum. And it does not get the it doesn't get the praise that it needs, the celebrations that it needs, or even the recognition that it should be getting. And Sandeep Nawal, the founder, noted that contributions that Polygon has made to Ethereum while receiving little recognition for those efforts. He serves as the Polygon Foundation's CEO and said that he's now questioning his loyalty to Ethereum, particularly the Ethereum Foundation and the community, which according to him hasn't given Polygon any direct support. In fact, the reverse, he says, adding that he has given his loyalty to Ethereum, even though it potentially cost him billions of dollars in Polygon's valuation, not to brand itself as a layer 1. And I would agree, a lot of layer 2s moved on to become layer 1s, and Polygon stayed on as a layer 2. And look at the valuation. From 2024 until 2025, we went from almost $1 down to 20 cents. And so, this is good for Ethereum as much as it's good for Polygon. But the Ethereum ecosystem, they're so focused on Ethereum, the bankless guys, Ethereum, never even talking about layer 2s. They talk about Solana more than they talk about Polygon, which is, you wonder why Ethereum has barely hit all-time record highs, hasn't even gone over $5,000, let alone $10,000. Well, they're not even recognizing the products that are building on Ethereum. I don't know what the reason is. Probably because they're not invested, but they should be, because Polygon helps to power and also take some of the strain off the main network. But Polygon helps the main network by doing this. Anyway, in this post, Sandeep Nawal said, read this from Peter and realize that it's time for me to also speak up. Not gonna lie, I've started questioning my loyalty towards Ethereum. I did not come into crypto because of Bitcoin, but because of Ethereum. The co-founder of Polygon said, I also have a lot of gratitude towards Vitalik, someone I looked up to as an ideal for how things should be built in this world, though I and we never got any direct support from the Ethereum Foundation or the Ethereum crypto Twitter community. In fact, the reverse. But I have always felt moral loyalty towards Ethereum, even if it cost me billions of dollars in Polygon's valuation, perhaps. The Ethereum community as a whole has been a shit show for quite some time. Why does it feel like every other week, someone with major contributions to Ethereum has to publicly question what they're even doing here? Just go your own way already. And so that is what is going on there. And Vitalik responded. And I mean, first of all, Sandeep is correct. And Polygon probably should become its own layer one. Is it too late? No, the answer is no. It's never too late in crypto to do anything. And the fact that Polygon can do things so much better than Ethereum from a microtransaction standpoint, from a speed and low cost transaction standpoint, there's something to say there. But, can Ethereum turn this around? That's a big question because, again, everybody's expecting, this is a big problem with the generation. Everybody expects somebody else to fix an issue, but no, like that's what the builders are here for. You have to be a builder. If you see a problem, fix it. If you see a business solution to a problem, go and pursue that business, right? That's the whole point. There's not somebody coming to rescue Ethereum. And people are relying on Vitalik or the Ethereum Foundation. I mean, everybody knows that these foundations behind these cryptos, they don't do shit, right? What do they actually do? They're not promoting the ecosystem. They're not driving the ecosystem. And Sandeep actually took over Polygon Foundation a few years back. He's like, no, Polygon Foundation isn't doing what they need to do. We're not getting the recognition that we need. I'm taking this over. And I think all the other executives at Polygon Foundation were either fired or resigned. And he took over and he's been trying. I've been seeing this and we've been covering it on this channel. But unfortunately, it just wasn't enough. And that's why we've seen the billions and billions getting drained from Polygon. Meanwhile, Ethereum maximalists are cheering on BS projects that literally don't bring any value to Ethereum and don't have the integrations that Polygon has. It's literally like the Litecoin of Bitcoin, right? Litecoin doesn't get any of the credit that it does to help the Bitcoin ecosystem. And the Bitcoin maximalists are part of the problem there. Anyway, moving right along, Vitalik's response, let's read through it. And by the way, don't forget to give this video a free thumbs up. Vitalik responded and said, I really appreciate both Sandeep's personal contributions to Polygon's immensely valuable role in the Ethereum ecosystem. To recap, Polygon hosts Poly Market, which is probably the single most successful example of not just boring finance application that has actually been successful and provided value. Polygon has also hosted plenty of other applications that have needed high levels of scalability. Polygon put a lot of resources into ZK EVM, proving early on by both bringing in this person's team and through other efforts, and greatly helped in moving the space forward. Polygon has built infrastructure for proof aggregation, or the AG layer. We've covered that as well on this channel. Just type in the Cryptoviser AG layer and many other things. Vitalik continues, saying, and also, Sandeep put a lot of his personal efforts into crypto relief, which has made large contributions to biomedical infrastructure and research inside India. He voluntarily returned $190 million of proceeds from the Shiba tokens that he donated to him. That doesn't make any sense, but whatever. Which has made the whole BALVI open source anti-airborne disease biotech program possible, and possibly accelerated the understanding of important anti-pandemic topics like clean indoor air by years. CZ also recently donated $10 million in Binance Coin to Vitalik to help contribute to the program. Big appreciation to both for this. Most whales passively think that things like this are cool, but are not willing to get off their butts and personally contribute, unless it's in the form of company that keeps everything proprietary to become yet another vehicle for personal profit. Sandeep and CZ are special here. On the ZK issue, after all, you do need proof system to get the full security guarantees that layer twos are meant to provide. Vitalik says he can see Polygon's difficult bind. They supported this team, I guess the ZK EVM team, putting their hearts and souls into the tech at a time when the tech was still too early for production. And so they contributed to the early and most difficult part of the learning curve. But at that part of the learning curve, it was difficult for themselves to directly benefit from the fruits of their labor. Effectively, Vitalik is saying that they took on this new technology or capabilities of the blockchain to help Ethereum. And they didn't even get even a thank you. Not that they need a thank you, but you guys kind of get the point, right? It's like this is to help Ethereum, and nobody's paying attention to Polygon. When Polygon's helping Ethereum succeed and thrive. Since then, the market structure has split into layer 2 teams and ZK teams, being separate entities, which Vitalik says he thinks makes more sense than the previous approach of every layer 2 doing proof systems in-house. It's very difficult to be both of the best layer 2 and the best ZK team. The two are different skills. He said, personally, I hope that at some point soon, Polygon can just pick up off the shelf ZK tech that has now gotten quite good and apply it to the proof of stake chain to get full stage 1 and later stage 2 guarantees from the Ethereum layer 1. Many don't realize how much ZK tech has improved. Proving costs are around 1,000th of a penny per transaction, and many layer 2s he talks with are very surprised when he tells them the recent numbers. They're still stuck in the mindset that ZK is maybe okay for Ethereum layer 1 scale chains, but unviable for anything hyper scale. And so, yeah, I mean, that's kind of like we like Polygon, but you need to get ZK proofs on board as well. At the end of the day, guys, these are end of cycle indicators in my view, right? Because this stuff does not happen in a bull market, right? And I feel for Sandeep because I've been following Polygon. I own Polygon. I've been a big supporter of the ecosystem. And everything that they've tried to get people to notice what Polygon is doing. And the Ethereum ecosystem, the Ethereum influencers, the Ethereum maximalists, the Ethereum channels, accounts, they just ignored Polygon. And literally, the major issue with Ethereum is that when it does have high usage, it becomes too expensive for anybody to use or want to use. And instead of promoting Polygon as a premier layer 2 with very, very low costs, very, very high scalability, very, very high integrations across the board, they choose to ignore Polygon. And a lot of, I think, the issue here is with the Ethereum community for sure. Because at the end of the day, yeah, banks may want to use DeFi, they may want to use Ethereum, but they're creating their own blockchains, guys. And why are they creating their own blockchains? Because Ethereum is expensive, Ethereum is slow, Ethereum gets congested, all of these problems. And so they're not using Ethereum, right? The Ethereum treasury companies, all the influencers, all the YouTubers from Ethereum community just jumped on this. Oh my God, Tom Lee is a genius. Tom Lee is a genius. Tom Lee is a genius. Because they wanted to pump their fucking bag. And at the end of the day, it did the opposite. It didn't pump the bag. And it's not pumping the bag. Maybe in the future it will. But it's the technology that pumps the bag. The reason Bitcoin outperformed most cryptos this cycle is because they have the technology and they promote the technology very well. Solana, they promote the technology, probably not in a great way with all the celebrity coins, Haktua coin, Argentina coin, all that kind of nonsense. That's really been the Solana cycle, this Bitcoin halving cycle. But at the end of the day, it's technology that was being promoted. And what has Ethereum community done in this final stage of the bull market? Right? After euphoria, after all of these companies announced, Ethereum treasury companies, all the influencers jumped on this, like, yeah, they're going to pump our bags, but they didn't. The early investors in Ethereum have been offloading and dumping their bags by giving it to these Ethereum treasury companies. The Ethereum treasury companies are giving them the money, and it's a private sale transaction. So the influencers, the YouTubers, the maximalists in Ethereum, they focused on Tom Lee and Sharplink when that was just the exit. That was the final exit. That was the final liquidity exit for these mega whales, and nobody benefited from that. Polygon didn't benefit from that. Ethereum didn't benefit from that. The developers on both of those chains didn't benefit from that. The only people who benefited from that are the treasury companies and the people who sold the treasury companies their Ethereum. That's it. And so now people are at the stage, and I think this is where Sandeep is at, where he's like, the cycle's over. We're fucked, right? And I don't think that the technology is, but I think that this cohesion with Ethereum is. Because even Vitalik's response, he starts bringing up CZ and the fact that they need to start using ZK proofs and all this nonsense. Go look at the I mean, we've covered this on the channel extensively. And this is why I'm like, if Polygon can't move up in valuation when it's the premier layer 2, the most usage, the most micropayments, the most USDC usage of any other layer 2, and nobody is highlighting this in the Ethereum ecosystem. Shame on all of them, because they effed Ethereum. And honestly, maybe Sandeep should make Polygon its own layer 1 and take all the technology that they've been using to help support Ethereum and just move it on its own chain and say, F Ethereum, F all of y'all. Whether he's going to do that or not, I don't know, but maybe he should. Maybe he should. And it sounds like that's the route that they're going. And honestly, if they do that, it's going to be a big loss for Ethereum, because a lot of projects have left Ethereum for Solana, for Sui. And if Polygon leaves Ethereum's ecosystem to create their own layer 1, in my view, Polygon wins. Polygon will win. Just from a metric standpoint, 20 cents compared to $4,000 or $5,000, $2 billion compared to $200 billion. Who the F is going to invest in Ethereum when everybody's exiting Ethereum? When the premier layer 2 said, well, you guys didn't even want to promote the stuff that we are working on. Bye. Where do you think the money's going to flow? Straight to Polygon. So we'll see how this plays out. I don't know that this is going to happen, but as I'm kind of discussing this with you guys on this channel, it seems like that's probably the best route for Sandeep and Polygon to go, especially that we are now rotating into a bear market, generally speaking, in the grand scheme of things. But we have a lot of investors, and we're about to get into that have invested in things that they didn't really understand. I mean, big investors, Gary Cardone, we're about to talk about with Nakamoto. And he's realizing it was a big rug pull. And so is he going to put his money in another overvalued rug pull again? Probably not. He's going to look for things like this. The big money is going to look for things like this. And if Sandeep can get integrated with banks, that's going to be big. And the banks don't want to use Ethereum, guys. It's too expensive. It's too slow, too congested. So that's a big opportunity here, in my view. We'll have to wait and see how this all plays out. Anyway, moving right along and showing more data and more indicators, we're at the top. This is a tweet from Peter Brand. He said, if Bitcoin is topped, and hey trolls, the word if is an English qualifier. Nobody can whine that an 8.2x advance cheated you. And I would agree. I mean, he's showing this line that shows, effectively kind of at the end stages of the bull market, in my view. And 8.2 times from the bottom, 15,500 to the top, $126,000. That's good returns. People are like, no, Cryptoviser, we're waiting for $250,000. I'm like, so you're waiting for a doubling when we potentially could go down 50%? Good luck with that. Meanwhile, Jesse Olsen, another obsessed with chart swing trader, said 308 days of this. Time capitulation has set in on Bitcoin. Double top in Let me zoom this in. 2024 double top, we highlighted that. Triple top in the middle of the year. You guys can see that. And then now we are hitting this resistance line. And this brings us back to July when I called the top of the market. And I said, guys, anything that happens after where we are in the middle of the year, this is just volatility. And that's what it was. If it wasn't just volatility and we were still in the early stages of the bull market, we would already be at $200,000. And so anybody who's playing still in this game right now, what happens after the complacency phase? Straight down, straight down. And on this channel, we've been prepared for this. But I keep hearing Cryptoviser, the M2 money supply, the M2 money supply, the M2 money supply. Guys, it doesn't matter what the M2 money supply is. What happened in the previous cycle doesn't matter what happens in this cycle. The Bitcoin therapist, that is a major Bitcoin maximalist, and everything is bullish, the Bitcoin therapist, he said, I don't think anyone is prepared for this. Prepared for what? He just posted a chart with gold, M2 money supply, and Bitcoin. And I get it. The Bitcoin maximalists believe that, because M2 money supply is going up, that Bitcoin has to go up. No, it doesn't. No, it doesn't. Not at all. Roe Ryder said, I don't think this chart means what he thinks it means. And I would agree. This chart is basically showing that gold is now outperforming Bitcoin and Bitcoin is rotating down. There is no support here in Bitcoin, right? All of this drama that's going on in the Bitcoin space and all of the people, every dip that we have, it's like, buy the dip, that's the bottom, that's the bottom. It's like, no. This is the bottom. This is the bottom. Where is the bottom? Maybe $50,000, $60,000, maybe even lower than that, because nobody thinks that's going to occur. Nobody thinks that we're going to hit that. And that brings us to the treasury companies. As I have been explaining with these treasury companies, they are the indicator. This is a preview of what is going to happen to many altcoins, to many crypto coins, including potentially Bitcoin and Ethereum. And people are saying, but Cryptoviser, altcoins haven't even had a bull run. Yes, they did. Yes, they did. In 2023 into 2024. You may have missed it. You may not have bought in or sold into profit, but that doesn't mean that we didn't have a bull run. We did have a bull run. And that brings us to the capitulation. So Gary Cardone said, David Bailey, how much funding do you have in cash today? If you've blown your wad, what is your next move? Gary Cardone, a shareholder with 500,000 shares. And so Gary Cardone, we've highlighted this. He bought into Nakamoto shortly after they made the announcement that they were going to become a Bitcoin treasury company. Right around the time that I told you guys it was the top of the market, right? Because that is the euphoria. When you have billionaires that didn't buy at the bottom and now they're buying into these treasury companies and thinking, oh, we're going to go to the moon, we're going to go up 100x. And I was like, no, that is the liquidity suck, right? I mean, we see this over and over. Haktua coin came out. Everyone's like, oh my God, Haktua coin's going to change the world. Really? Like, really, guys? You believe that? And it happened with a lot of these celebrity coins, right? So this user said, why does it matter if you have 500,000 or 6 shares? All that matters to the people who own it is you always like to throw around big money figures and most of your statements, as does your brother. I'm not sure if that's just to make a point or a lot of ego. I really don't think it's ego. Gary Cardone responded saying, if Nakamoto has no money left, what are they going to do? They were designed to invest in Bitcoin and Bitcoin opportunities, right? My question is not one of ego. It's simply as a shareholder of Nakamoto, how much money does he have on the balance sheet? The answer is simple, 0. They have no money. They have no business. And by the way, I'm starting to get ads from MicroStrategy's software business on X. I'm going to pull it up in another video here, but that is an indicator for me. Because now I think all of these companies are starting to realize you need cash flow. Wall Street doesn't buy the bullshit. Oh, well, we have accretive value on Bitcoin per share and Bitcoin per share. Guys, Wall Street doesn't believe that shit at all. At all. And the more they push it onto Wall Street, the lower the stock prices are going to go. You need to make money. Now, there is this whole conversation that Nakamoto is going to purchase some of these Bitcoin companies that David Bailey is part of, right? Like the Bitcoin conference and stuff like that, which are cash flowing businesses. But they're going to be buying this with shares. So they're going to dilute your shares even more than they're already diluted. It's not looking good for these Bitcoin treasury companies because, again, Bitcoin is at all-time record highs, and these Bitcoin treasury companies, they look like pump and dumps. And so what happens if Bitcoin drops by 50%, 60%, 70%? 70% from here is like 4 cents. And people are like, new Cryptoviser, that's not going to happen. No, it is going to happen. This is what happened to the Bitcoin mining companies in the previous cycle. You can't see it. You can look at my videos, just type in Core Scientific Cryptoviser. You can't see it on the stock price because they reissued new shares after they came out of bankruptcy. But Core Scientific was in bankruptcy and the stock price went down to 5 cents. We bought at 5 cents on this channel. We bought. So this is going to occur, right? And this is top indicator when these investors who were not involved in crypto and they thought that Nakamoto or the other Bitcoin treasury companies or the Ethereum treasury companies were the answer. No, it was just a liquidity suck on the market, right? You give us your money, we'll go buy Bitcoin with it. Instead of Gary just going and buying Bitcoin himself, he bought into Nakamoto thinking it was going to make more money, even though they have no business model. There's no cash flow. And just buying a Bitcoin conference company, I don't know that that's a viable business thesis. So it's really unfortunate because a lot of people are going to lose money. And it says, well, here you go. And this in response to Justin Belcher's tweet that says, you're looking at a desperate man leveraged to the teeth with toxic debt, no at the markets, meaning he can't sell more shares on the open market, and no cash, and days away from a hostile takeover. And this is true, right? Nakamoto is very close to a hostile takeover, meaning here's what I think is going to occur. And maybe not with Nakamoto, but definitely with these Bitcoin treasury companies, because Anthony Pompliano's company also bought the top of the market, Strive. And it's also another one that's not doing too well. There is a very high possibility that it is going to be a hostile takeover, meaning the shareholders say, you're the CEO, you're fired. And they put in a new CEO that understands business and says, okay, we're selling some of the Bitcoin. And when they do that, the market is going to crater. Because once one does it, there's going to be more that do the same thing. And they've all been saying they're not going to sell the Bitcoin. They're not going to sell. Even if MicroStrategy buys the Bitcoin from them, it's a bailout then, which still means that the whole thesis behind it failed. And this idea that you're never going to sell your Bitcoin is a failure. Because whether MicroStrategy buys it or not, if they're selling it, they're selling it. And people are going to lose confidence. And in my view, this chart is an indicator of what is about to occur in the rest of the market. You can look at ASST as well. This is Strive, another company. They just bought Semler Scientific, which is another Bitcoin treasury company. So they're all just buying each other and trying to help each other out. What does that remind you of? Celsius, Voyager, 3 Arrows Capital, BlockFi, Terra Luna, and FTX. This is end of cycle, guys. It is end of cycle. And once that drop once we exit complacency, and nobody's going to know until long after, once we exit the complacency phase, you can see straight down. And we're already there in certain assets. Anyway, moving right along with the AI bubble, Citi's valuation model says that AI is not in a bubble yet. Artificial intelligence stocks may look expensive after recent strong gains, but Citi analysts say that it still doesn't appear to be in bubble territory. They said AI does not look like a bubble yet, based on our valuation monitor. Citigroup continued their note that said, while recent price action may have been abnormally strong, there are only a couple of red flags in our valuation monitor for broad AI exposure. As a result, Citibank said that it would stay invested in AI, but noted that taking profits makes sense in more US asset heavy businesses and international AI adopters. And so, what is another indicator of top of the market? Well, look at what's happening with Ocean and Fetch AI, the Artificial Superintelligence Alliance. And by the way, I'm going to be posting a separate video on that. It's going to be called the AI Crypto Alliance Implosion. I would definitely implore you guys to watch that video because it's going to have a lot of good information. But now we're seeing Ocean and Fetch AI feud escalates to legal threats as Binance has now restricted deposits. What in the AI is going on here? A feud between Fetch AI CEO and the Ocean Protocol Foundation has escalated into legal threats, on-chain accusations, and a reaction from Binance, all centering around 286 million Fetch AI tokens worth about $84 million. The conflict stems from Artificial Superintelligence Alliance, a 2024 merger that combined AI-focused crypto projects Fetch AI, Ocean Protocol, and SingularityNet under a shared token framework. In October, the Fetch AI CEO or founder alleged that Ocean Protocol minted and transferred millions of Ocean tokens before the merger. He said that the project later converted them into Fetch AI coins and moved large sums to centralized exchanges and market-making firms without proper disclosure, effectively accusing them of a rug pull. He said if Ocean, as a standalone project, did this, it would be classed as a rug pull. And so, amid the escalating dispute, crypto exchange Binance announced that they're going to cease support for Ocean deposits at the end of October. While the exchange said users can still deposit using other supported networks, it said ERC20 deposits made after October 20th will not be credited and may lead to asset loss. The exchange didn't mention the dispute as the cause, but limiting these deposits suggests the exchange is conducting internal risk controls or investigations in this dispute on Ethereum. The Fetch AI CEO interpreted Binance's decision to cease support for the tokens as the exchange listening to his public calls on X to investigate Ocean Protocol's token transfers. And so I don't know what's going on here. I don't know whether this was a rug pull, whether it wasn't. I don't think it matters. I think the fact that they're having this public dispute like this, it's over for all of them. I mean, this reduces trust in the ecosystem. And by the way, this also only happens at top of the market. This doesn't happen in a bull market. This doesn't even happen in the end of bear markets. It happens at the end of bull markets and in early stages of bear markets. So that's something to keep in mind. But meanwhile, according to Steve Shu, who is a physicist and AI founder, he said in regards to this whole AI bubble situation, he said, as Jamie Dimon said, another 20% to go before we hit peak bubble. I think the best story I can tell in favor of no bubble is a huge breakthrough in agentic capabilities in the next year or two, followed by record-breaking revenue growth and adoption. But it's highly speculative. People who actually build AI applications using LLMs know how much the devil is in the details and not captured by demos that wow the credulous. And so, again, what you see here is OpenAI chart and just the interweavings of these companies all connected to each other. And so when you see this kind of thing, this could mean a bubble. And even if we're 20% away from before we hit peak bubble, is it worth the risk? That's the question you got to ask about crypto as well. And I don't think that it is worth the risk. And in other news, also top-ish in my view, Coinbase has acquired up-only NFT from Kobe, a well-known crypto influencer, for $25 million. And basically, this NFT allows for one season of Kobe's former podcast called Up Only. It says the holder of this admission ticket, or the NFT, can compel Kobe and Ledger Status, his company, into performing like monkeys 8 episodes of Up-only TV. It does not convey any sponsorship rights, and we are allowed to call you idiots for buying it, or ignore you completely with 0 mentions of your existence during our 8-episode season. We get to pick the guests, but if we like you, then we might ask you for some suggestions. So Coinbase spent $25 million to basically get Kobe to restart his podcast. And that comes out to about $3 million per episode. And Thread Guy said, at $3 million per episode, Kobe is making the way more than Kai Cenat or Speed. I don't know how much of a bigger sign you need to see how bullish the crypto media space is. And I would agree, crypto media space is probably going to grow from this, but it's also end stages, right? They don't do this in a bear market. They do it at the top of the market when money is flowing freely. And therefore, yes, guys, we are still at the top of the market. Yes, we are rotating into a bear market. I think we laid it out very clearly. There's so much tension and, I guess frustration with differing projects, with the with cohesion behind these projects and the teams. And this is just an indicator of where we are, both in crypto and potentially in AI. I'll see you guys in the next video. Let me know your thoughts down below in the comments. And as always, crypto on.